Hello, this is Eric Boyce, CEO and Chief Investment Officer for BKA Wealth Consulting, and welcome to a presentation about the 2020 election and implications in our market and our economy as best we can judge at this point. Please see our disclaimer for important information. So before we start, I want to issue a caveat that I'm not making a recommendation on who should win the election. I'm not going to necessarily say who I think will win the election. I'll leave that to you to look in the national media for that type of information and to kind of look within yourselves on how you feel. This is meant to strictly be an analysis based on all the available information we have at this point, kind of on what the implications are for investors, what the implications are for the economy, and what the implications are for the investment markets as a whole. So just to issue a brief caveat there. But in looking at this, the implications are varied, right? And so we know that there's a possibility of a disputed election. That would be very unfortunate. Would drive uncertainty into the market. The market does not like uncertainty. Uh, President Trump's approval rating is 38%, and no president has ever been reelected with a rating that low. And Truman did get reelected with a 39% rating, but we've never seen anybody below that get reelected. And we know that regardless of the result, we're going to need more fiscal stimulus. We know that that's become a real political football right now. I think there's a lot of doubt as to whether that's even going to get done in 2020. Now, tax regime will look a little bit different depending on the results. We know, again, we'll talk about this, but again, if President Trump wins re-election, then a lot of the tax changes from 2018 that are due to sunset in 2025, there would be an effort made to make those permanent. And obviously, under President Biden, there would be much more sweeping tax initiatives, and we'll talk about that. More onshoring of manufacturing, that's probably going to happen regardless. And anti-trade sentiment, especially with regard to China, which is helping to drive some of that onshoring, especially in key and critical industries like pharmaceuticals, where we kind of realize that we are as strong as our weakest link there. And then continuation of modern monetary theory. And this is this theory that as long as you have low to near 0% interest rates, that you can continue to issue debt till the cows come home, because it's no more costly to you than to do anything else. So you could continue to see initiatives being new legislation for new spending coming out, and we'll talk about that a little bit as well. And I think it's pretty clear that regardless of who wins election, that Fed Chairman Powell is going to get a new 4-year term. Investor implications. I think I just want to be careful to caution everybody that the results will not likely be the primary driver for market activity. I think a lot of people look back in 2016 and say, well, President Trump got elected, and then the markets really took off after that. That was not expected. Obviously, the election itself, the result was not expected, but long-term returns are driven much more by valuations and asset allocation. And so with that, I think it's really tough to make big bets on a one-sided outcome. And if you have a long-term horizon, just stay the course. It'll all work itself out. Modern monetary theory, I think, that's pretty well established. That's going to continue to expand our national debt, treasury issuance, and it's going to continue to increase the Fed balance sheet, even though it's going to want to reduce it at some point. And the stance on inflation is likely to keep real interest rates low to negative, which will certainly keep probably put a lid on the dollar being able to appreciate. It's going to, it's going to help asset prices like equities. It probably will help to support gold. And again, like I said here, the dollar softness is likely to continue. And if we have a Biden presidency, then you could probably look for more Obama era regulation and tax, and the potential for this to influence some very important sectors of the market. So the probability. Now these, is injecting a little bit of my own theory into what I see as kind of that national consensus now. So this is really no change in leadership, the status quo, maybe a 35 to 45% chance. It's just really odd. We know what happened in 2016. The polling data was not correct, and when we got to the real data on game day, it was different from what the polling suggested. So, you take a little bit of a grain with salt. I mean, obviously, Biden is ahead by and large more than Hillary Clinton was in 2016. A Democratic sweep, frankly, is about a 50% probability, maybe slightly more, and then a split ticket where you get a Democratic president, but the GOP retains control of the Senate. That's not very likely at this point. Feeling that amongst all of the experts that however the presidency goes, the Senate will go with it. So a Biden win and a sweep. Now, mind you, the sweep in the Senate will not result in an overwhelming majority for the Democrats if it happens. Now, they're going to have, if it were to happen, they'd have a majority. It would still be tough to overcome filibuster and things like that because they won't have those types of numbers. But basically, the goal that's been put out there is, as Biden's policies have been made known, is about 5.4 trillion in new spending over 10 years, which includes almost 2 trillion in education, over 1.5–6 trillion in infrastructure and R&D, and then housing. You can see also childcare, healthcare, and paid leave. And to help fund that, there's going to be 3.4 trillion in new revenue that he's going to want to raise corporate income taxes, obviously raise payroll taxes, and increase individual taxes as well. And then with that, you get more spending on healthcare, environmental. There's going to be a move made to provide student loan relief, and obviously federal assistance to state and local government, which is a big sticking point for the Dems right now in this negotiation that's not going very well in terms of the follow-on stimulus package. But again, kind of some hallmarks of the Democratic platform: look for renewable energy, electric auto initiatives, and probably to real assets there at some point. And then with that, you probably get some increased at least interest in wanting to promote environmentally social responsibility and governance type of investments, and then I think obviously you get more deficit spending perhaps than you'd get even with the Trump presidency, leading to a weaker dollar. Now let's talk for a few minutes about the tax policy goals. Now this is if Biden wins the presidency and you get a Democratic Senate. Now, a lot has been made of this, and I'll probably spend a little bit of time on this. So, basically, you're looking at in this the possibility of raising the top marginal rate from 37% to 39.6% for incomes over $400,000. And so, basically, if you could think about if you can afford to defer any investment losses into future tax years, it might make sense to do that, and might make sense to initiate a Roth conversion if that's part of your strategy for tax advantage income down the road. So a corporate rate, that's gonna, the proposal on the table now it's not a proposal, but it's a platform plank, is that you raise that 21% rate, which was lowered in the 2018 legislation, to somewhere between 25 and 28%. And that would not quite be where the corporate rate was before that legislation hit, but it would be somewhere in the middle. Probably easier to get that done. Now, eliminate step-up basis at death is a hallmark of estate planning. That has tectonic implications. Or at least lowering the estate tax and or lowering the estate tax exemption by perhaps up to half. And then you just don't know what the future holds for that. For high net worth clients, you might consider making gifts this year to lock in a historical high, exemption level of about 11.6 million. And then you've got Social Security tax, which is 12.4%, cut in half between the employee and the employer version on all income over 400,000. So that has implications for employers with highly compensated executives. Obviously, it has implications for highly comped workers with kind of that big donut hole in the middle, and it's going to require a lot of work to perhaps get that through. And dividends, capital gains treated as ordinary income for incomes over $1 million. That's probably a little easier to get that done. If you have investment gains, you can tap and take advantage of the lower cap gains now. It might make sense to do that, or if you can afford to, again, defer any investment losses or deductions into future tax years, it might make sense to do that as well. And I think, really looking at all that, the administration of the changes in that step-up basis and treatment change in dividends and capital gains, that is going to be an administrative nightmare. And I think that type of hurdle makes it a little harder to kind of get some of this done. But I want to caution in all of this that it's a very fragile economy right now. We've talked about this a lot in our market minutes and our charts of the week. And with that makes a broad sweeping change in all of this highly unlikely right off the bat. But there is clearly that fear in the market. So if Biden wins and you have a GOP Senate, again, this is a very low probability, but then you'd have a deadlock legislative and budgeting process, and you'd have lower spending as a percent of GDP, so less spending because of this gridlock. And generally speaking, if you're not spending more and being profligate, it tends to work better for the investment markets to have that type of gridlock. Now, if things stay the same, I think it's probably somewhat intuitive that, we don't get as much fiscal policy. There's not going to be as much interest, to spend. Obviously you've got Tea Partiers in Congress that are even reluctant to go anywhere with this fiscal stimulus package now, let alone the 2.2 trillion that the Democrats are kind of floating around as their kind of, low ball number. But you're going to have more infrastructure spending. I think that's clear. More tariffs, more restrictive trade. I think it just creates a more adversarial global trade environment, and perhaps even continue global trade decline, and which will benefit domestic focused companies. And obviously you'd have tax rates that would likely remain low, and which would provide less friction for real assets and for the stock market. And again, as I mentioned before, there's obviously would be a very strong push made to make those low tax rates permanent. So this is a set of observations from Ned Davis Research out in Florida, which I thought were worth reintroducing here. That and these are kind of interesting things. So Trump is the 12th president since 1900 and the 7th since 1950, when we had a recession and a bear market in an election year, and it's not typically beneficial for incumbents. And the estimation is, and we don't get the final analysis for a while, but the 2020 recession actually likely ended in May or June, and sentiment, is very key. So if you have poor sentiment, and we know sentiment is a little deflated right now, even though spending is higher, that typically does not bode well for incumbents. But interestingly enough, post-election rallies are usually stronger when the GOP retains the White House, and weakness when the GOP loses. But when that happens, there's usually a fairly decent reversal in the follow-on year. And equities, for some reason, perform better when GOP controls Congress. And as we've talked about, there's a fear that if Biden wins, we're going to get higher taxes. I think that's, that's certainly a valid fear, but practicality of getting those tax increases in year one when we have the economy that we've got right now is, I think, a bit of a push, especially with the prospects of a pandemic vaccine being available for mass distribution, being pushed well into 2021 probably. Biden challenge, he's got to balance a centrist part of the party and the progressive wing of the party. So, that's just a wild card. Don't know if he were to get elected, would he kind of continue to stay towards the center or would he push left? We don't know that. And then clearly, healthcare, financials, and technology are under the most pressure, with regard to prospects of the election right now. So now we're going to begin our charts, and this one just highlights the difference between Trump and Biden supporters on these very critical issues. And you can see that there's a wide gulf on many of these items. So you just see the partisan bickering and the partisan divide on so many of these important things. And obviously, if you go down slightly below the halfway point, I mean, something that is really speaks to our social unrest this year is the race and ethnic inequality. You can see the huge gulf there. Climate change is usually there's a large delta there, but even on the coronavirus outbreak, I mean, we know there's a huge delta there, as well as healthcare and how and sentiments related to economic inequality are very, very strong out there. And so very interesting data there. So this is what I alluded to earlier, and it kind of tracks the average lead of Hillary Clinton in 2016 to where we are now. So, I mean, basically, the Hillary's lead as it leads up to the presidential election, it varied as high as 8% at one point to 6%, but as low as below 2%. And we haven't seen that level yet, even though the gap between the Biden and Trump numbers has narrowed somewhat, as you can see here in the gold bar, but it still hasn't reached those average levels that we saw in 2016. Electoral college projections. This is a little bit of a busy chart, but what it tells you is that just, that there's more of a lean towards Biden. And this is, various projections by different entities, different think tanks, and you can see the average of those. Knowing that there's 270 electoral college votes that are required to win the presidency, that by and large that kind of skews to Biden, at least right now. Preference for president. Again, I thought this was kind of interesting too. So as you can see here now, if you look at race, I think there's that gulf is very wide and extremely wide. And then you can see that men tend to lean towards Trump, women tend to lean towards Biden. Overall, obviously there's a lean towards Biden, but high school or less, basically, non-college educated people tend to lean towards Trump, with some college and college graduate and postgraduate clearly leaning towards Biden, and as well as swing states as a Biden lean right now. So if the election were held today, who would you vote for? And these are various online and phone surveys that have been compiled. This is data acquired September 10th through 14th by Morning Consult. And as you can see here, 2020, and this contrasts against 2016 as well. But you can see that basically, if it were held today, that Biden has this lead. But as you can see, Hillary had a lead in 2016, not nearly as much, but there was definitely a lead. And so you take these things with a little bit of a grain of salt. Down below, you can see the income layers. So, if you're low income, then you tend to get a little bit more of a Biden lean. Maybe you get a little bit more of a Trump lean with the higher incomes, perhaps, but not necessarily. Clearly in the $35,000 to $75,000 range. I mean, there's still a pretty good delta between Biden and Trump here. So this chart comes to us by way of Real Clear Politics as of September 20th, and this takes kind of a look back at the lead that Clinton had in some of these key states, as well as what turned out to be the eventual margin. And it's kind of interesting here. And then contrasting that against where Biden has leads right now. So as you can see, as you scroll across, basically in Michigan, the lead was very pronounced that Clinton had, but that state ultimately went to Trump. Pennsylvania, Wisconsin, Florida. Florida was expected to be a push, but Trump won it. And then you can see what happened in Arizona and North Carolina, and those are states that Trump won fairly handily that now look to be a Democratic lean this go around. So I find this to be pretty interesting. Just from the standpoint of the magnitude of the Biden lead in some of those states, Pennsylvania notwithstanding, Michigan notwithstanding, but Biden clearly has a stronger lead in some of these swing states that appeared that even Clinton had 4 years ago. The share of voters casting ballots. Now we know coronavirus. There's a lot of people that want to vote by mail, and we feel like there's going to be a fairly strong mail voting response, and this is at the heart of what Trump has been talking about and his fears for a rigged election. Again, I'm not opining on that. I'm just saying that it's clear that you're going to have more ballots that are going to be cast by mail, and you can see this trend has been developing over a number of years. And so the notion, just on its face, that you have more mail balloting in this season, this election season, as being fraudulent or whatever, it really kind of falls on its face, because this trend it's not developed overnight. It's clearly been moving higher over a period of many election cycles. So, and this shows you really difference by party on who's going to vote by mail. Now you can see that if you're a Trump supporter, more than likely you're going to show up on election day or early voting. But if you're a Biden supporter, more than likely almost half of you are going to be voting by mail, or you're going to be voting early, and only a quarter of you, more or less, are going to be showing up on the election day. And in 2016, let's see, in person on election day, that was 59%, and by mail was 24%. I pulled this slide from a Goldman Sachs a presentation that I saw, and the interesting thing about this is market doesn't like uncertainty, but the prospects of a disputed election or contested type of result I think are relatively high. And so this question posed to this quick poll in September, just when do you expect one of the candidates to concede? You can see that you've got a reasonable number of folks that assume, in fact, over 30% believe that it's going to be after at least a week to perhaps a month after the election, and that's pretty interesting. So, and then obviously, if you don't have a clean election and it's contested and all that, then you on the right-hand side, you can see that the consensus believes that there's going to be a downtick perhaps less than 10%, but there's an appreciable percentage there at 17 that believe it's going to be down 10% or more. So I think this is clearly suggesting that that there's a expectation out there that's going to take a while to find out who the president is, and it's going to create some market turbulence during the interim. National polling data. This is from Real Clear Politics. This is kind of gives you a 2020 view with a 2016 overlay. So right now, by and large, this national polling data is 50.5% for Biden, 43% for Trump. You can see up above that, I mean, clearly Clinton had a lead. It was only 2 percentage points there, and the actual result was, she did win the popular vote, but obviously not the electoral vote. And then Wisconsin and Florida follow along a similar path. This is a graph from Morning Consult of the share of voters who would vote for the following candidates if the election was held today. So it's another one of these little snap polls that kind of give you a sense of who would do what if the election were today, and it breaks it down by generational layers. So you can see that there's a stronger Trump lean in the pre-boomers, but that really kind of goes away once you reach baby boomers, and then you can clearly see that the Gen Zers are much more in favor. That younger cohort is much more in favor of Biden right now. This data is from a combined Wall Street Journal NBC News poll from August. And on the right-hand side, the left-hand side refers to 2016, but the right-hand side I thought was really interesting because it confirms some of the rhetoric that's out there that Biden supporters are not really voting for Biden. You can see 58% are actually voting for Biden only because he's not Trump. And so, but you don't see that with Trump supporters, that 74% are voting specifically for Trump. So we've already talked about the risks of GOP losing the Senate and the prospects of a Democratic president and a sweep of Congress. And this chart shows you how that sentiment has really changed and evolved over the last several months. And it was a clear estimate earlier with this feeling that the handling of the pandemic wasn't very strong by the president, that you had much more of a Democratic lean, narrowed a lot at the beginning of September, in fact actually inverted, now has kind of widened back out again. But in any case, there's essentially a fairly decent probability now that the Democrats will hold the Senate from a survey conducted by Predicted. So on this slide from LPL Research and Strategis, it just shows you the magnitude of the proposed tax increase would be the largest that we've seen in really a generation. Much more so compared with the other administrations you see towards the right. This is a kind of a step chart of what that new spending and the revenue would look like. You can see, that what we've talked about earlier is the healthcare infrastructure spending, education, and to a much lesser degree, paid leave, but also housing in there. But new revenue would come in the form of corporate tax increases and payroll tax, individual tax increases, and as well as net new spending. Net spending would be up about $2 billion. Excuse me, $2 trillion. So this is a historical chart. On the upper side of this, it gives you kind of an average of multiple administration presidential cycles and how the market's done. You can see typically in the first and second year of a presidential cycle, the market typically doesn't do as well, even though it is up on balance. You have a much bigger response in the market typically in your third and fourth year. And your fourth year obviously being your election year in a presidential cycle, and you can see that by and large we have mimicked that here in the Trump administration, of course, notwithstanding several large shocks, and certainly notwithstanding the pandemic this year. You can clearly see more volatility in this particular cycle than what we've seen over the average of prior cycles. Here we have a Dow Jones Industrial Average in presidential election cycles. This comes to us from Ned Davis. You can typically see that when the incumbent Republican wins, that you typically have a stronger response in the market, and you typically have a weaker response when that incumbent Republican loses. Now, that's not to say that if Trump loses this election that the market is going to go down, but it's obviously going to be a little bit more turbulent, I think, and it's going to have, at least looking by this, it would tend to skew us to thinking that the market might be a little bit more challenged in 2021. And this is the chart again from Ned Davis research that basically since 1900, when you had a 20% decline in the market or you've had a recession, that the incumbent party has won less than they've lost, and so even since 1952, and in fact since 1952, the incumbent party has not won an election when there's been a 20% decline or a recession. And that's obviously where we've been this year. So that's certainly worth considering. This is a chart where you see rallies and corrections. Basically, if the incumbent party wins, the greatest rally on average that you see is almost 28%. Maximum correction that you see is about 10 to 11%. But when that incumbent party loses, you tend to see a much greater response. And in fact, if you go down to the bottom, if the Republican incumbent wins, you typically see an average of 21% in terms of the greatest rally potential and 10% correction on the downside if the Republican wins. Now, if the Republican loses and the Republican is the incumbent, then your response is typically much greater. So this is a chart from Ned Davis that just shows us what, by their analysis, the change in a corporate tax rate, if it were to be moved from 21 to 28%, it would result in roughly a 4 to 13% decrease in Standard & Poor's 500 index earnings per share. And if you just take kind of a midpoint of that, then we're probably talking about 8 to 9% decline. So to conclude here, just a few investment takeaways. We have some unprecedented money flows in the market from not just necessarily from stimulus, but just from increased liquidity overall. We've got more smaller investors in there. We have this kind of a bundle of enthusiasm, if you will, even though we've seen a little bit more volatility lately. But enthusiasm that there's a vaccine on the near-term doorstep, and kind of this complacency of sorts. The volatility we've seen has been more on the technology stocks that have been the market leader in this recovery. But overall, I think volatility, if you back that out, has not been terribly great. But I think the markets are pricing in the election. And I think to some degree they've lost sight of what's going on with the pandemic right now. Fiscal stimulus is typically lower for first-term presidents. So, it depends on whether we see a Biden presidency or if we see a Trump presidency. There's probably going to be more spending perhaps than we've been used to, but the context of that will change. Is it more healthcare if it's Biden, or education if it's Biden? Is it more infrastructure if it's Trump? We just don't know that right now. But stocks are following the typical election cycle as we saw on that chart. And we know that they're better off when GOP runs Congress. and strongest gains when the GOP wins, but we also show that that's probably, according to the analysts, is probably not going to happen. But small cap and value stocks are dependent on the economic recovery. Obviously, if we spend more, then you probably will have a little bit of jolt in the arm. But again, if you don't have an economic recovery, or if we have increased pandemic issues that kind of weigh on economic growth, then would continue to expect those to perform less well. Healthcare tech continue to be under political pressure. Obviously, the fears of a tax increase are out there. I don't think that the people that are exhibiting the greatest fear in that regard are really taking stock of the fact that we have a fragile economy, and I think that type of legislation would really not bode well for economic growth. And then finally, the 2018 tax cuts greatly benefited share buybacks, and it also benefited capital spending. So if we walk those back and just think about the benefits to investors from share repurchase have been actually fairly profound, and the benefits to companies from capital spending have been noticeable as well. And so if you walk that back and provide less juice, if you will, for companies to do things with, then you could see a reversal in that regard. But again, we just don't know. There's still several weeks to go before we hit the election. Again, we'll come back and have more analysis in this area, more charts as we come across, more research as we continue to do our reading in leading up to the markets. But I go back to what I said at the very beginning, and just simply say that trying to plan for that binary event, who's going to win and how do I position, I think is in some cases kind of a futile exercise if you have this long-term investment horizon, which I think most of our clients do. So again, there's some tax type things to be aware of that I would urge you to get with your tax professional and contemplate. Are you deferring more losses in the future? Are you trying to take advantage of certain tax laws now at the risk that they might change later? So those types of discussions, I think, are very healthy right now because there's some pretty strong attitudes with regard to tax laws on both sides of the aisle right now. So again, I'd leave you with those few comments, and we'll conclude for today. Hope you've enjoyed this election analysis. Welcome your comments at the information that you see here. We'd love to hear from you. Be safe and have a wonderful week.